So I like to say, if you're worried about a death benefit, buy an insurance policy,
Right.
right? If you're worried about, long-term care, buy a long-term care policy.
Right.
And if you're worried about running out of income, buy an annuity because other than a pension or Social Security, there is no vehicle on the market that is going to give you the ability to guarantee an income stream no matter how long you live.
Hey, this is Matt Helton with One Trust Home Loans, your reverse mortgage experts, and you found the Serving Seniors podcast. And that's where we highlight those businesses and those individuals that help seniors not just survive, but thrive in retirement. And today we found one of those awesome people with a very applicable name based on our tagline on our podcast. We have Mr. Chris Maduri, and Chris is with Vibrant Retirement, and that's the name of his firm, but that's what he allows and teaches seniors how to do, how to emotionally as well as physically and well as spiritually plan for retirement in a way that they can use their money the way they want to use it, leave it the way they want to leave it, but also have that vibrant retirement that they want to have. Chris, how are you doing today?
I'm doing well. Thank you for having me on.
Yes, sir. You're so welcome. Thank you for being here, sir. We appreciate your time and thank you for working us in. How have you been lately?
Doing great. Had a wonderful Mother's Day weekend, and yeah, back at it. Full
Back.
of, I do love the fact that on Mother's Day, it's like they just plan more and more sporting events, as if that's what the moms were really just clamoring for. It was like, you know what? Let's see if we can get a doubleheader in this weekend.
There you go. As long as you win for mom, I guess it's worth it. If you lose, then we have things to talk about, right?
Yeah, exactly.
Well, sir, well, thanks again for being on here. I found that a lot of people, what's the phrase? They gotta like you and trust you before they work with you, and a lot of people kind of want to learn some background and who you are and where you're from. So maybe bring us up to speed. Who's Chris? Where is he from? And then a little bit about the journey to get to this field.
Yeah, absolutely. I'm from Darien, Connecticut. I grew up in Stamford, Connecticut, right next door, and been in the industry for it's close to 2 decades now, which is somewhat horrifying.
Mhm.
And got in actually right around the time of the financial crisis,
Okay.
and was working on for a mutual fund company. And then when everything went south. I found myself out of a job, unfortunately, and then moved over. Instead of on the investment side, I was more on the insurance, working with annuities for the first time. Knew absolutely nothing about them, and really, kind of became a student of them and about the insurance industry and the products and the ways that they can help seniors. It's a population that I think everyone's really looking to do more wealth planning and asset management for folks. But you realize quickly that when you move from accumulating assets to spending them down, all of the risks change.
Wow.
And a lot of times the advisors aren't really equipped to make the changes and introduce new tools into someone's portfolio to help them have a vibrant retirement. So my background was actually working as a wholesaler and kind of coaching financial advisors on it. And now I do a little bit of a hybrid, working both with financial advisors and with the general public, and just trying to educate people on their options and really trying to actively listen to what folks want in retirement and help them to understand all of the intricacies and kind of get ahead of the game, and both from a financial aspect, but also from a psychological and emotional aspect, because there's so many changes that take place.
That's great. That's
Yeah.
great. Well, I always like to joke and say, hey, if you'd like to do a seminar that we have lots of extra sandwiches left over at the end, let's call it reverse mortgages and annuities, because maybe you and I would be the only one that actually show up, right? Because of the misconceptions and changes that's happened that no one knows about. So I'll talk about the reverse mortgage stuff. Maybe could you fill us in on what's going on in the annuity space, what's changed and why someone may even consider that based on their reputation in the marketplace.
Yeah, I really appreciate you kind of leading with that because it really is a misunderstood product. And it's not without reason. I think a lot of going back to the early 2000s in particular, variable annuities were all the rage. And, they were really meant to provide tax deferral for folks that were already investing in mutual funds. And the problem was that they really were loaded with fees
Mm.
and expenses and, really had a big drag on the person's ability to grow their income or, to grow that asset. And over the years since that time, you've had new products that have come onto the market. The insurance industry really looked at what people didn't like about them and made changes. So, if you're on CNBC and you're hearing people talk about, I'll never sell an annuity, and one of the primary drivers is fees. The majority of the annuities that I sell have, if they have any fees at all, it's going to be, less than 1.5%, typically right around 1% if someone's using a guaranteed income rider. But, that fee has a purpose, right? That is a rider that you're adding on to it to ensure that you never run out of money, even if your account value hits zero, right? So as we're planning for retirement, one of the, if not the biggest fear in retirement is running out of money. Well, you can't run out of money if you have a paycheck coming in every month until, the day that you die.
Yeah.
And it's just a misunderstanding. So, I love what you're doing. And I think if we can re-educate people on the current, whether it's version 2.0 or 3.0, whatever we
Right.
are on, and really understand both sides of it, right?
Yeah.
You don't want someone that's just selling you a product and not going to tell you about any of the negatives within the product, right? There are some limitations because it's a contract. So we want people to really understand that and to be fully on board so that there's no surprises.
Yeah, that makes sense. Yeah, it sounds like the reverse mortgage and annuity seminar would have quite a bit in common if we did do the seminar, because the most expensive part of most reverse mortgages is the called mortgage insurance, and it is a percentage of the appraised value. So the more expensive the home, the more expensive it is. But what it actually does is, if you ever live long enough to owe more than your house is worth, which sounds bad, but if you think about it, that means you used all your equity traveling, having fun, paying bills. You used it, and your house did not catch up with appreciation, meaning your balance on your home was more. So you used all your equity, you owe more than the home is worth, and then you're able to give the home back, and it's even Steven because the actual insurance you bought pays the home off. So if you think about it, it's the most expensive part, but it's also the best because a senior could be laying on their deathbed and not have to worry about their kids having to stroke a check to pay off their mortgage because the insurance pays it off. So it's expensive. It's usually 2% of the appraised home value, but it's also a one-time charge that covers all costs if you owe more than the home is worth. So just like anything, you get what you pay,
Wow.
right? You get what you pay for.
Yeah, yeah. The overlap is actually really interesting.
Yeah.
Then with the annuities, or a lot of times people are looking to make this like an all-in-one type product. They're
Mm.
going, oh, well, if you run out of money, there's not going to be a death benefit. And when you're taking income out of the product or using an income annuity, the name of the game isn't the death benefit, right? The name of the game is taking enough money out so that you're, eating off of the insurance company, right? Where at the end of the day, you're taking out, an extra, let's say, 50 or 100% of what you put into the product. That's how you win.
That's how you.
And the benefit is that that's money, if done correctly, because we'd never say, oh, put all your money into an annuity.
Right.
No, you're using this to create a baseline for your income. But all of the money that's invested in, whatever you want to call it, if it's in ETFs, mutual funds, or whatever it is, that's the money that you're going to be passing along to your heirs. So I like to say, if you're worried about a death benefit, buy an insurance policy.
Right.
right? If you're worried about, long-term care, buy a long-term care policy.
Right.
And if you're worried about running out of income, buy an annuity because other than a pension or Social Security, there is no vehicle on the market that is going to give you the ability to guarantee an income stream no matter how long you live.
Wow. Yeah, that's awesome. Yeah, that's awesome. I like to say the reverse mortgages they're basically another, they should call them second chances. And you're like, well, what do you mean by say? Well, it's the long-term care policy that someone slid across the table 30 years ago, but you said was too expensive, right? It's the 401k that you every month we're going to start maxing out the next month and the next month. And next thing you know, it was 30 years and you had too much going on never to max it out. But you probably bought a house because, well, we're humans. We like to live indoors, right? It's a quality we have. So you bought it, but they don't let you stay there if you don't make the payments, right? So you had to make all the payments on your house because you had to, not because you wanted to. And the market took off over the next last 20 or 30 years. So, I mean, you have all this equity there, but it's not doing you any good. So it's kind of, you didn't buy the long-term care, you didn't max out your 401k possibly, but you do have a lot of equity. And then this is just a way you can use it without being stuck with a huge monthly payment. But you still own your house, you can still sell your house, you can still give it to your kids, you can still invest if you needed to, those type of things. So it all kind of works together. Um, Quite a bit of the same stuff that you're saying, a lot of strategy in place.
Yeah, I would think for folks, it's probably, if it's not their biggest asset, it's close to it, right?
Yeah.
And they haven't, when you get to that point and you're stuck and you're going, oh, how can I get asset? How can I use this asset to live off of it while I'm alive
Yeah.
without having to sell it and still have a place to live?
Yeah.
So I think just like annuities, if it's not something that you're just going to sell to everyone, right? But it's got a really specific purpose. And the people that it benefits, it creates massive benefits for,
Yeah.
right? But if you're, you know, selling it to everybody or putting everybody in a reverse mortgage, then yeah, people are probably going to have some pushback on it.
Yep, that completely makes sense. Well, that's awesome. Well, maybe could you share with us a couple examples of people you met that had some issues, some concerns, you were able to consult with them, add some value, and improve their situation? A couple examples would be great.
Yeah, absolutely. Um, we find people all the time that just either, undersaved or they have a bunch of money sitting in um, the wrong tax vehicles, right? So trying to talk to people about not only asset allocation, but the location. You're finding a lot of people now that have tons of qualified money because they, did do a good job, and whether it's their 401k or IRAs, and now we're sitting there and they're going, I don't want to take RMDs. Hmm.
Wow.
Well, it's definitely a first world problem, but we want to help people to make sure that um, they're not paying more in taxes than they need to, and also planning for taxes now and where they're going in the future, right? Because we have massive debts in the United States right now, so the idea that taxes are going to be lower in the future, that is probably a misnomer. In all likelihood, they're going to be higher just so that we can pay our debt. So, we'll talk to people about Roth conversions, whether we want to take a portion of the money and, pay the tax now while it's at a discount. Yeah, that's one of the things that we work on with folks. We have people that have come to us. Long-term care has been another big one. As you mentioned before, people not maximizing their 401k, but long-term care is possibly the biggest issue that we're going to be seeing as populations keep aging. And people aren't dying, but they are aging. And cognitive decline is a very real thing.
Mhm.
So, for people that are the ideal age, if you were going to be um, doing something proactive for long-term care, would probably be in your 50s when you're still working. Um, you don't have a ton of medical stuff going on or anything like that. But, we also find folks that have waited too long
Mm.
and they need care now. And so how we're going to fund that care, which, I mean, if you think about it, if you need full-time care in a private facility, that can run you 200 plus thousand,
Mm.
per year.
Right.
That is a big number.
Hmm.
And I don't care how much money you have, even if you're uber wealthy, in 5 years, you're going to spend $1 million on that. So we just started working with the first medically underwritten SPIA
Okay.
on the market, without getting into too many details about it. But if you have someone whose, health is failing them and they want to, pay for their care, whether it's to stay in a home, whether it's to, avoid having to spend down all of their assets, so that they would qualify under Medicare. This is a solution that is going to give people the ability to um, pay to be guaranteed an amount of income for the rest of their life. So we're funding whatever that care gap is. But when you go and purchase an income annuity from an insurance company, they use mortality tables and the law of large numbers. So it's going to be based on what the average age of the person is and what the expected age of death is.
Mm.
If that person's health is failing, then, and you're only expected to live 3 years, 5 years, somewhere in that neighborhood. When you do medical underwriting, it's going to cost that person a whole lot less. And they're going to be guaranteed, um, an amount of money for the rest of their life. And, it's just a great way to save people money on the back end. And so that that money can go to their heirs or, their favorite charity or whatever it is that they'd like to do.
Wow, that's awesome. That's awesome.
Yeah,
Is that something you do quite often? Always looking for new products and strategies and ideas to serve people?
absolutely. I have relationships with about 75 insurance companies. And I love that because I want to be able to access the best solutions for clients. And, you see some agents that are what they call captive. If you only work for one insurance company and you can only sell their products, right? And that's probably not going to serve people. So, we're always looking for solutions, especially when it comes to income. And because the insurance companies, as interest rates have gone up, they're retooling their products so that they can offer more to their clients. And we want to be able to offer more as well. So we have a number of technological tools at our disposal to run income quotes, see who the highest guaranteed payouts are, and utilize those companies. So yeah, I would say the majority of the time, we're looking for folks, or folks are looking for accumulating assets with downside protection. And it's probably number one of what we do. Number two is providing guaranteed income for life. And then 3/4 is going to be life insurance and long-term care planning.
Okay, fantastic. That's great. Well, Chris, maybe share if someone's watching this as far as one is how to communicate with you, how to get in touch with you, and then also what areas and parts of the country do you serve?
Yeah, so my website is vibrantretirement.com. All of my contact information's on there. Feel free to, whatever your preferred method of communication is, email, message, phone call, whatever it is, and we can start having a conversation there. Um, you asked the second part of that question
Yeah,
that
yeah.
is now.
Would you work all over the country or specific areas?
Yeah, all over the country, all 50 states. So there's a couple of folks, if you're in Guam or Puerto Rico, we're probably going to have limited products for you. But, if you're in the 50 states, yeah, we could definitely work with you.
Okay, that's awesome. So mostly, I'm assuming Zoom meetings, consultations, things like that, just like this, and it's almost like you're sitting there with them, right?
Exactly. Yeah, we can utilize technology for that. I spend a fair amount of time in Florida as well. So for folks that are down there, if you want to do face to face, if it's uber important that you meet with somebody face to face, we can also work that out as well.
Okay, that's great. Well, that's awesome. Well, Chris, you've been a wealth of knowledge. I guess, is there anything that I didn't ask you that I should have asked you that you like to share as we wrap up?
Um, yeah, I would say, when you're planning for your retirement, to really try it on, right? I think the most critical aspect of retirement is the first 5 years. So if I can offer one piece of advice, um, the 5 years before you retire and the first 5 years of retirement, make sure that money is in a guaranteed place that is not contingent upon, any market or interest rates or anything like that. Just make sure that that money is protected. And we can go into greater detail as to why, but one of the biggest statistics is that if you have a negative shock into your portfolio in the first 5 years of retirement, your chances of running out of money increase by up to 40%.
Wow.
Right. And that's not 40% from zero. That's 40% on top of whatever the chances were before. So you don't have to get everything right in retirement, but you really got to get those first 5 years right.
Wow, that's awesome. Great advice. That sequence of return risk could
Yeah.
go against you quickly, right?
Yeah. Yeah. That's a big one.
Wow, that's awesome. Well, that's great information, and thanks for sharing. And I think that's why I'm glad that we connected, and I love what we do, is because whether the market goes up or down, what we do is open up a whole nother bucket of money that they weren't expecting to use, right? That home equity is just sitting there, and your home goes up or down no matter what you owe on it. But if you could open up 100 or 200 or 300,000-400,000 in equity, that's just available, not because you have to have it, but available when you need it. A lot of times that can get you through those shocks. We've seen situations where the market turns, they're able to use their equity for a few years, let the market portfolio rebound, and then turn the reverse mortgage off and turn the distributions back on. And it just works out really well. It can be another, almost like a lot of people do that with cash value of life insurance, but not everyone
Yeah.
has that. You could do that with a reverse mortgage as well on the planning side.
Yeah. Yeah. Having those in your back pocket is just, it's not only can it save you from a financial standpoint, but the stress levels that you're not going to have,
Yep.
right? Because that I think is really um, what puts people in a tough spot. And when they're in retirement, and, it ties into your health, it ties
Yep.
into, your lifestyle and all of those things. Yeah.
Exactly.
100% right.
Yep. There's a big difference of working in retirement because you want to versus working in retirement because you have to.
Yeah.
You could pick those people out in a lineup, I'm sure, by the look on their face of who's enjoying their job because they like it and who wishes that they were somewhere else. So that's what we allow folks to do, is if you're going to work in retirement, by all means, have some fun, stay busy, but be able to do it because you want to, not because you're forced to just to pay the bills.
Love that. Yeah.
Yep. Well, we love helping. Well, thanks again for being on here. I'm sure we'll have some more conversations, but I really do appreciate you sharing this wisdom, and thanks for the journey you've been on to learn new things so you can share with people out there. We really do appreciate that education.
I really appreciate the time. Thank you so much.
Yep. Thank you. And thank you for watching the Serving Seniors podcast, where we highlight these awesome businesses and people like Chris that help seniors not just survive, but thrive in retirement. Thanks again. We'll see you on the next episode. Hey, this is Matt Helton with OneTrust Home Loans, home of retirement mortgage solutions. And we really do appreciate you checking out the Serving Seniors podcast today. Now, please go to the description down in the body of the podcast where you can subscribe to get future shows. Please click that notification button so you get notified when other shows drop. And also, if you can go to servingseniourspodcast.com, and we'd love to hear a comment about our show. We have a heart to serve seniors, and we have a heart to make sure seniors don't just survive retirement, don't just get by in retirement. We want to show seniors how to thrive in retirement. So if you know of anyone that's 55 and older that could use some extra cash flow, maybe the retirement's not going the way that they'd like, our retirement mortgage solutions are designed for folks, and depending on the state, they're either 55 or 62 and older to make sure that they have that kind of retirement that they want. As long as they own a home and they're in a good equity position, there could be some solutions that they may not have thought about, or maybe they've thought of and they just didn't know how they work. That's what we do. So anyone in that age group that could use some mortgage advice, my team and I would love to be able to help them. Thanks again, and look forward to seeing you on the next show. Have a great day.